Okay, good morning, everybody. First off, a welcome to President Aliyev of Azerbaijan and OPEC Secretary General Abdalla, Salem, Badri, and our four CEOs to discuss one of the more pressing issues linked to the global economy. With weaker growth, we've seen, of course, weaker oil prices. If I can draw an analogy here, if one was to be in the lead car of a roller coaster and had to ride the oil market for the past 12 months, it would have been as we say in America, a real white-knuckle journey. This is what it looked like. We have a graph looking at prices from 2008, Davos 2008 through Davos 2009. As you can see, we started with prices around $100 a barrel at the meeting last year, and they really only gathered momentum from there on their march to $147 in mid-July. Prices ticked along for a couple of months with the belief that this great discussion that we had in Davos 2008, that decoupling would take place and that there would be a break between the developed and the developing world. Some even predicted as late as August of 2008 that we would see $200 a barrel by year's end. But like the shipping market, and if you look at shipping rates in the month of September, the bottom fell out of the energy market in that month and went from $100 or $120 to $60 in about 6 weeks' time. As a result, OPEC producers have responded with 3 moves since then, announcing record cuts of 4.2 million barrels a day in the last quarter. Non-OPEC producers have signaled their support to trim production, although skeptics remain whether all of those pledges that were made in Algeria in December at the OPEC meeting will come through. Of course, there are far-reaching implications as a result of this price fall, which we want to explore in the next hour. Foremost is a long-term strategy. Investment in future capacity if prices languish for more than a year at around $40 a barrel where we are today. Energy security, the issue has come up at the start of 2009, especially in Europe, with the current natural gas distribution network leaving countries extremely vulnerable. It's something that President Putin addressed last night from his position. And what I'd like to call the Goldilocks scenario, a price that's not too hot and not too cold, if you remember the tale, one that encourages alternative energy development while sustaining efficient fossil fuel production and usage. And you probably saw coming out of Washington last night in the comments from the Deputy Managing Director here in Davos, John Lipsky, the reforecast for growth for 2009 from 2.2% this year all the way down to 0.5% for 2009. That's the slowest growth since World War II, as we've all been discussing, and how we respond to that in terms of long-term investment strategy for energy. Mr. President, I'd like to start with you, if I may. At the December meeting of OPEC in Algeria, your government, as a non-OPEC producer, and we haven't seen the OPEC and non-OPEC producers together in such a force since 2002, you offered cuts of 300,000 barrels a day to the lowest level for you in terms of production in 2 years. Now, in your view, and knowing what I've said about the forecast for 2009, would you say we're done cutting production this year? Not only from Azerbaijan, but the major producers in the world? Are we done taking more production off to the market, or does more production need to come off at this stage?
To my mind, I think the cuts which have been declared and now are in the process of implementation will be sufficient in order to stabilize the price. But of course, everything will depend on the demand and on production. It will depend on how these commitments will be fulfilled. As far as Azerbaijan is concerned, though our production still is not very high, we try to contribute to the common cause and try by various means to play our role with respect to the price stabilization and energy security. Both issues are interrelated and both are very important. Energy security issues 5-6 years ago were not even discussed. Today it's a big problem, and it becomes a problem not only for consumers but also for producers. And Azerbaijan, as a producer, of course, is interested in providing our energy security by having a multiple access to international markets. So I think that joint efforts of oil-producing countries, at the same time mutual understanding between all the players of the energy policy, like producers, transitors, consumers, will create a better situation for all of us.
If I can follow up very quickly, the Nabucco pipeline, which would link your energy supplies coming down in through Turkey, had been stalled for a number of years, off and on the discussions since 2003. I would imagine that the Russia-Ukrainian dispute then has provided some impetus to get this thing moving. There was news this week. This will be an accelerated timeline to get that production out from Azerbaijan and the Caspian region.
Of course, it's very important for us to have a clear understanding what our potential markets are. So far, Azerbaijan is exporting its gas to the neighboring countries. And today's level of gas production actually is covered by existing infrastructure and existing markets. But we are on the eve of starting the major gas production. We are planning to at least double gas production in the coming 5 years. Therefore, existing markets are not enough. Nabucco had a lot of problems. The problems of political support, political will, financial commitments, transit issues, and too many players are involved in this project. Therefore, I think the combination of efforts of the countries involved, at the same time strong financial commitment, can help the project to move. We know from our experience how it is difficult to build a pipeline which doesn't have a resource commitment. But we did it together with our partners, together with BP and other companies. We built the Baku-Tbilisi-Ceyhan oil pipeline at a time when oil price was around $30. At a time where production profile in Azerbaijan was about 200,000 barrels a day. We started to invest in a pipeline with a capacity of 1 million barrels of oil a day. Therefore, the countries of Nabucco and the organizations which support this project, I think, must act more courageously. They should not look at this project only as a profit resource. It's a matter of energy security. Energy security leads to general security, to independence in the long run. Therefore, I think there should be more political will, more clear financial commitments, and of course countries like Azerbaijan, which are ready to play its role as a transitor and as a supplier, will of course do all what we can in order to support the project.
Good. Thank you very much. We'll come back, obviously, during the hour. Mr. Secretary General, OPEC's been more aggressive than it's ever been in terms of taking supplies off the market in the fourth quarter of 2008, as I mentioned in my opening comments here. The IEA forecast for daily demand is around 85.3, 85.5 million barrels a day. It's not too far off of where OPEC has been. Do you reforecast at this stage to take more production off the market to keep a floor of around $40 a barrel at this juncture?
Thank you, John. When we look at the demand contraction or the demand destruction since July of 2008, we see a lot of demand destruction and a very low demand, as a matter of fact, and the prices at the same time were coming down to the point where we think that it is very dangerous for us if we want to produce and also invest. So we decided to cut the production in October and in Iran, Algeria, a total of 4.2. Now, the 2.0 that we cut in September and in October, that was really our member country adhered to 100%. And the 2.2, we will not see the result before February 15. That's when we see, the secondary sources. But from the information I am seeing at this time, it will be about 100%. So by the end of this month, January, about 2-3 days from now, I think we will take out of the market about 4.2 million barrels a day. Now, we have to review these numbers, see how the market will react to it. If we still have some downward problems, then of course OPEC will not hesitate to take some quantity out of the market. But we're still reviewing this matter. We cannot tell at this time before our next meeting in March 15. However, we also lower our demand. We see that there is a lower demand in 2009 by about 200,000 barrels a day. Maybe it will be more. We see that there is really a slowdown everywhere. We are really concerned of this low oil prices because we don't want to repeat what happened in the 1980s and in the past where we did not invest, where we lay off a lot of very qualified people, not NOCs, not our member countries also, but IOCs. And then when the demand picked up, we really were paying the price of shortage of material, shortage of spare parts, shortage of skilled manpower. So we would like to have a reasonable price where we can have a reasonable income at the same time we can invest in a new capacity. At this time we have an idle capacity of about 7 to 8 million barrels a day. That idle capacity needs somebody to take care of it. It will not stay alone without any additional expense. It needs somebody to take care of it. It needs somebody to keep it running, but not to sell, the outcome of that crude. So we are seeing that 2009 will be a very difficult year. We see a lot of stimulus packages, a lot of bailouts in the United States, England, EU, China, everywhere. I hope that this stimulus package will do something to the demand, not only in oil, but all other commodities. And maybe we see sometimes at the end of this year, beginning of next year, we'll see a pickup in demand, and we have to be ready for additional capacity to satisfy that demand.
If I can follow up quickly, have we marked the bottom of this market? We did break 40. With the economic forecast that we see today, is the floor around $40 a barrel, knowing what we see in the economic pipeline, which is quite dire?
Well, I really don't know. We are not very happy. We are not happy, as a matter of fact, with 40, with even 50. We think even 50, we cannot really have a decent income for our member countries, and at the same time we invest for additional capacity. So it's, I hope that the price will pick up sometimes now, at least to go a little bit higher, because $50 price will not permit us to invest. The investment, ladies and gentlemen, is the name of the game. If we don't invest now, we will have the problem. We are just postponing the problem for the next 3-4 years. When your economy will pick up, when the demand will pick up, you will not find excess capacity to satisfy that demand.
Thank you very much, Mr. Secretary General. If I can go to Tony Hayward here very quickly. The Secretary General specifically talked about an extra lack of demand now because of this reforecast that we've seen by the IMF of maybe 200,000 barrels a day. Do you think that's cutting it short, that in fact this excess capacity in terms of where demand is today is greater than 200,000 barrels?
Well, of course, none of us really know where demand is going to be in the future, because it depends entirely on what happens with the global economy, the success, I suppose, in the first instance of resolving the banking crisis, and then the success of the stimulus packages designed to get the economy moving. But if you take the more pessimistic views of the world, which would say there will be effectively no growth in the world at all in 2009, then I think demand loss of perhaps up to 1 million barrels a day is more likely. So, it depends entirely about the success that the world has of getting the economies of the world moving again. I think that's the big point here, is that the price is low because demand has fallen, because economic growth in most parts of the world has stopped. This is not about low prices because we've added lots of new capacity. It's about demand destruction, at least in the short term. And the big challenge for all of us is to recognise that when economic recovery returns, demand will come back very fast, and it won't be very long before demand runs into supply constraints unless we are all able to invest through this downturn. I agree absolutely with the Secretary-General. The most important thing is having a price that enables the industry to continue to invest through the downturn.
It brings a question to Mukesh Ambani. Most people don't think of India as a producer of its own natural resources, but there's been a 25-year plan to reduce the reliance on imported fuel because of the cost of that bill every year and the growth that we've experienced for the last 7 years in India. As a company, Reliance Industries has gone into the Bay of Bengal and the KG Basin, particularly exploring natural gas here. With prices now dropping, will this inhibit your investment in the Indian fields going forward? And if you can just pull the microphone a little bit closer. Thank you very much.
John, as far as India is concerned, India imports about 80% of its energy, and the growth, energy for us is critical for development, for quality of life of our people. So the growth in India, even in these circumstances, is going to be near double digit. Clearly, we have a large resource on the east coast of India, which is now being developed. And as Reliance, we've developed this at the peak of the cycle. But we've had the first experience with private sector, and I think we've achieved capital efficiency so that we are now able to sell this natural gas in the coming months to Indian consumers at a wellhead price of about $25 to $28 a barrel. And the investors are happy, and the government is happy, and the consumers are happy. And we've done this in a regime which was very challenging in terms of capital costs. So within that, India has the opportunity to find more gas, and this will be where the Secretary General talked about reduction. Within India, one company, Reliance, will bring in 600,000 barrels of oil equivalent a day in the coming 6 months into production. And most of this gas will be used by consumers at the price of between $25 and $28 a barrel. So that's, and if we really talk about demand and price, I think one thing that all of us need to understand is that bulk of the demand is going to come in the next 25, 30 years from the developing world, from Asia, from the Middle East. And price becomes a very, very important factor, because it's just not about government economics or company economics. It's really about quality of life of millions and millions of people. And affordability is critical. Towards that, as India, we've demonstrated that you can drive efficiency, energy security. And fortunately for us, because we've got natural gas, it's a bridge to ecology also, because and I think that's really the challenge for all of us. If you see the last 2 or 3 years, India gave large subsidies. So we protected our growth rate. We protected the consumer from $100+ oil price, because the consumer still paid an equivalent of $40 or $50, and the government absorbed all of it. Critically, what worries us in the developing world is the volatility of prices. What we don't understand is, I think, is that for every 1 barrel of oil that is produced and sold in the world, 30 barrels are traded. So it's really the impact of Wall Street on the main economy. We don't understand how prices can go up 5% and come down 5% in single days in the past year. And what is required if really hundreds of millions of consumers who are emerging consumers who are now coming in to the main economy to improve a quality of life, if they need to get affordable energy, how do we create a balance and how do we really create a world where it's good for everybody. And to my mind, that really needs for all of us to think about some sort of an overarching regulation where physical volume, the ability of paper volume is transparent to the world. There is enough data in the world, in today's world, where one knows whose money it is, whose physical trade it is, who's buying and selling, and there is oversight, so that at the end of the day we've got to evolve to a world which is good for everyone. It's good for consumers, it's good for producers, governments, and it drives efficiency both in terms of capital costs and prices. It drives a sensible ecological footprint in terms of, because I really think the world is in a journey of decarbonization. If you think oil in the world has been around for 150 years, and if we think about our journey of 200 years, we've started with wood, we've decarbonized to coal, from there we've gone to oil, we're bridging to natural gas, and I'm sure that when we look at our future generations, everybody talks about the end of oil, but we've all got to realize that we've got enough oil as we know now for 100 years more. It's our responsibility to make sure that we create this bridge to a decarbonized world in a responsible, sensible way. And some of the developing countries really can provide a platform to show the world as to how you can make that journey.
Very interesting. It provides also a nice natural transition to Mr. Gadonneix about the investment, the CapEx expenditures that you've laid out for EDF over the next dozen years, 30 billion euros into nuclear energy. It makes up 18% of the UK's energy needs already. I mean, what should be, if we can pinpoint this down, the European target for nuclear energy in the global mix now over the next dozen years that you've laid out this capital expenditure plan?
What I would like to share with you today, and it has been already mentioned, I think developing investment in the energy sector, I think, is more than ever a necessity and an opportunity. Necessity and opportunity for stakeholders, for operators like we are, for governments. Why? If we look back 2 years ago, here, the major topic we discussed was that the world has realized that there was a huge challenge in the energy sector, a challenge of security of supply, and a challenge of global warming. And the conclusion, we said, all of us, that there was a huge necessity for investing in economy savings, investing in developing new sources, in oil, coal, in renewable, and I already mentioned that we should develop nuclear. And it's, I think, an opportunity, because in the environment of crisis, all governments are looking for economic stimulus. For the energy sector, we have a long-term perspective. When we are investing in a new plant, in a new nuclear plant, in a new hydro plant, the perspective is several decades. It can be a century. And in the century from now, we know that we will need that investment. So it's not too late, it's not too soon, we can invest now. The long-term perspective of the energy sector has nothing to do with the economic trend that we are living now. All of us know that the economy will start again. Nobody knows if it will be in months, in years, but we know that it will start again. But the energy needs that I mentioned are really there. So we should invest. And I think all these analysis is a very good environment, and Mr. Putin yesterday mentioned that, for the renewal of nuclear. And clearly my company, EDF, is bound to play a major role in the renewal in nuclear, in France, in Great Britain, in China, and maybe in the United States.
Good. I want to come back to Mr. Putin's comments last night about international cooperation and then the strategy of bringing producers and consumers together. There's an effort by Saudi Arabia and OPEC in June to that path. But I'd first like to bring in Alberto Weisser, and another supplier of alternative fuel and a specialist in biofuels. Now, the Secretary General talked about it at the beginning of his discussion about oil demand was at the start of 2008, and then that path up to $147, at the same time that demand for grains was causing a great deal of dislocation in the Middle East and in Europe with price inflation for food. And everybody started to say, why did we ever go down this path of biofuels? What a huge mistake to be taking grains off the market to put fuel on the market. Now, President Obama has come in, his Agriculture Secretary in his testimony to Congress was saying, we are going to follow this path towards greater biofuel production. It's not a mistake. It's energy efficient. It's friendly, Mr. Vilsack. And most see this as a policy for U.S. farmers only, and a means to kind of lower the import price of crude. Is it wise, knowing the inflation that we saw last year when demand from the developing markets was strong, to follow this path in this segment of the market, Alberto?
I think the contribution of biofuels is very important. It is really the only realistic alternative to transportation fuel at the moment. And not only the energy component is important, because using another source, the sugarcane, 1 ton of sugarcane is the equivalent of 1.2 barrels of oil. And also the ethanol from sugarcane reduces the carbon emission by something like 86% vis-à-vis gasoline. So the contribution of biofuels is very important. Not only ethanol from sugarcane, but also from corn. Now, we have to be realistic that there are limits. And if we would convert the whole sugar crop in the world today, this would only represent 5% of the consumption of gasoline. Or if you would try to supply the whole world with ethanol, we probably would need, from sugarcane, we probably would need over 1 billion hectares. That is not realistic. I think we should be realistic that the contribution of biofuels is going to be important, but it's going to be marginal. And there are other components that we should be careful of. You mentioned one. It is on the prices of food. We also have to remember that over the next 30 years, food production will have to double, and energy consumption will also increase. In addition, we have to remember that 70% of the water consumption today in the world goes to agriculture. And we have already some countries where the consumption of water is unsustainable. One is India, the other one is China. So there are physical limitations on what the contribution of biofuels can do. Now, there are a couple of areas or a couple of things we can do to improve this. And one of them, very important, is technology. Not only the traditional one we talk about, cellulosic ethanol and so on, but it also goes in the area of how farming is done, using more fertilizer, accepting more the biotechnology. We still have an issue in Europe that genetically modified organisms are kind of rejected. So it is important to allow the technology to grow, to have a positive contribution. The other area that we need some more space, some more room, is free trade. The US still has a tariff on imports of ethanol from Brazil and other parts of the world, which is a distorting factor. Or when you think about Europe has this mandate on biodiesel, where one of the most noble vegetable oil, the rapeseed oil, is used to drive cars. At the same time, we are importing in Europe 3.5 million tons of palm oil, which is a saturated fat oil and has an impact also in Indonesia and Malaysia on the forests. So, and when we think about also what happened last year, that some governments restricted the exports of grains and even helped to increase the prices more. So I think it is very important that technology, free trade is addressed, and in order to allow biofuels to have a more positive contribution. At the same time, I'm positive, I'm optimistic, because we see more and more cooperation between governments, NGOs and the industry. In many issues, there is much more discussion and policies are coordinated more. And we also have to remember that over the last 30, 40 years, we doubled already the amount of food production and we decreased the area of agriculture by 25%, all due to some free trade but also some technology use. So I'm optimistic there. But to your first question, if you hear the FAO, the Food and Agriculture Organization, probably the biofuels only was the third most important reason for the high prices on food last year. The most important one was the higher demand, second one was a diminished supply, and only third was the additional demand from biofuel.
But it did exacerbate the situation, which was the criticism. I'd like to broaden our discussion out now and then prepare for some questions from the floor in about 10 minutes. If you, we will open the floor here. I'd like to go back to the point of President Putin's speech last night when he talked about the need for international action to promote global energy security. We started the second year here with a dispute between Russia and Ukraine over the distribution network into Europe, and again caused a great deal of dislocation and pain for many consumers in Central Europe, for example, Bulgaria and Romania, for example, and then it reached in even to Germany with supply disruption. Mr. President, how do we avoid this yo-yo game of using energy as a pawn in the game of geopolitics at this juncture? I mean, realistically, we can get an honest assessment. What is international cooperation if we go 2 years in a row with supplies being held up for political reasons?
Well, it's a matter of attitude. It's a matter of energy policy, or if I may say so, energy philosophy. As far as we are concerned, Azerbaijan has already proved that we are a reliable partner. We fulfill all our obligations in front of our consumers, and we have a very fruitful cooperation in our region between us producers, transitors, and consumers. And we look at our energy resources, of course, first of all, from the point of view of our national interests and our sustainable development. At the same time, we are trying to use these resources in order to strengthen cooperation, in order to support our friends, countries which depend on us, countries which will not tolerate today market price for gas. We must be realistic. And to find this balance between fair price and long-term interest is very important. So I think there can be various reasons for what happened just recently, but the basic difference is in approaches. If you try to use energy resources in order to get something more, or if you are trying to use your territory to get less price, then these crises are unavoidable. If you are trying in good faith to combine the interests of all the players of the energy market, then you'll see success. I think that our experience can be illustrative, and we can share this experience and prove that it is possible to use energy resources as an instrument of friendship, not as an instrument of conflicts or alienation.
Thanks very much. Professor Schwab, in his opening remarks last night, talked about the World Economic Forum, in a sense, supporting this effort and new financial architecture of the G20 during a time of crisis. Mr. Secretary General, I'm actually very concerned that there's very little momentum here to move on the path to greater cooperation within the G20, to real financial architecture, to real energy cooperation. The Minister of Saudi Arabia, Mr. Ali al-Naimi, called that meeting in Jeddah in June to bring producers and consumers together. Great fanfare for that to happen, great cooperation. The meeting in December went by with hardly a blip. The G20 meeting in November, great fanfare, great cooperation. The March to April in the London meeting doesn't look like it's going to amount to much. How do we get to real cooperation for energy security, supplies, a fair price that you've called for in your opening comments, and cooperation with consumers for secure supplies at a reasonable price?
Well, I think it's a very difficult question, but I'm going to try. You know, when in 2008, when I was looking in my office at $147, $150 price, I don't believe in that. And I was not really happy at all to see that high price. Maybe it is strange, but it is true, because that was not based on any fundamentals. When I look at the physical market, I don't see any shortage of supply. That price was created by speculation and nothing else. And you know, I don't have to go with you how this speculation process started, because of the subprime and the financial market and the flood of the investors to go to oil and commodities. So we were seeing a very high price that we don't believe in. We know that one day, very soon, the price will come down. That price will have a destruction effect on the demand side. Now, yes, we encouraged the Jeddah meeting. We went there. Of course, there is a mixed point of view. Some say that the dollar, some say that the speculation, some say that no, it is a supply and demand problem. But in OPEC, we believe, because we follow the market. I get in touch with my member countries. Do you have a queue of customers that they want oil? They said no. And some of them, they give a discount. Would you believe they give a discount to sell some of their oil? So there is something strange. That's why we asked for the Jeddah meeting and also the London meeting. I think we should have some kind of, we cannot eliminate the speculation. Speculation will be there. But I think we should have, first of all, a guidelines for this speculation process, because it does damage the market, it does damage the demand, and the spill all over the economy of the world. So I think I am really I would like to encourage the cooperation, the dialogue between producers and consumers, where we can understand each other, where we can have a reasonable price where we can have some kind of enough income for our countries, and also where we can invest for future capacity. Remember that the energy overall, it grow by 1.7% to 2030, at least what we are seeing. Remember that the energy will be increased by 50% to 2030. Remember that the fossil fuel as a whole will dominate 85% of the energy. Remember that oil will dominate 40%. We can cooperate. Of course, unconventional energy maybe by 2030 will reach 11 million barrels a day, an increase of about 5 or 6 million barrels a day from 2006. But of course, they started from a very low base. I'm sure they are growing. OPEC, we really have no quarrel with other source of energy. However, we think, and I am seeing a lot of people saying that, okay, we have a very low price, why we don't increase taxes? The taxes, the oil sector is already burdened with taxes. In the pump, you are paying more 60% of that to fill your car because of the taxes imposed by your government. So we really need to cooperate together. How we can have a reasonable price, where we can invest, where we can prolong our energy, because remember, at the end of the day, you have 1.6 people who never saw the energy in Africa and the development. 1.6 billion. So I see a lot of countries that they're talking about interdependent. They dependent of OPEC, dependent of any other countries. There is no such thing. We have to live together. We have to cooperate together. Thank you very much.
Thank you. I'd like at this juncture, because it goes back to your comments, to bring up another chart that I brought along, looking at the oil price from 2000 to 2009. And the reason I wanted to do this is because it shows what has happened with that demand in 2006, 7, and 8, and then that collapse in price. But more so to look at the average price between 2000 and 2009, which on NYMEX forward delivery oil was $50 a barrel, $50.12 a barrel. And in my comments, I talked about a Goldilocks price for oil. What is a fair price to encourage investment and not put a huge strain on the global economy? I'm not talking about this juncture in time when there's demand collapse. But Tony Hayward, and then I'll come back to Mukesh. What are we talking about here? The oil minister of Saudi Arabia, for the first time in a decade, said we really should be at $75 a barrel to encourage what the Secretary General talked about, a reasonable return on investment and a reasonable timeline for planning the next 10, 20 years for oil production.
Well, I think you do have to start with the big context, which is over the next 20-odd years, the energy industry globally needs to invest of the order of $25 or $26 trillion. It's $1 trillion a year to provide the energy that the world will need over that time frame as it starts to grow again, which we all believe it clearly will. So, what in the oil markets, what is it that will continue? What sort of price level will continue to motivate investment going forwards? And I would say there are a couple of places from which you can triangulate. The first one is in the OPEC world, where certainly I think the Secretary General would agree with me, from the perspective that I have, for the OPEC countries to be able to balance their budgets, sustain the social investment programs, and invest for the future, it would appear that a price somewhere between 60 and 80 is appropriate. I don't know whether it's 60 or 80, but it's somewhere in that range. The other point of triangulation is what is the cost of the marginal 3 to 5 million barrels a day of world supply, which is the more expensive end of the curve. It's the ultra-deep water of Angola, Brazil, and the oil sands of Canada. And again, the price that is needed today to stimulate investment into that sort of resource is of the order of $60 to $80 a barrel. So that seems to be what you need to get investment. I think the other dimension is to look at what was happening to demand in that price range. And the fact is that consumers continue to do their thing, basically, through that price range. And it wasn't until prices got above $100 a barrel that we began to see changes in consumer behavior because of a price signal.
Good. Mr. Gadonneix?
I would like to stress the fact that investment are needed, and I completely share the volume which have been mentioned of the necessity to invest. But the market, to achieve this investment, needs some signals. The oil prices is one signal. But I think we are in an environment where the governments will have an increasing role to play. And the governments can give the signals through their policies, through the tariffs, through the incentives. And I think it is necessary to have that signal that in the long term, price of energy will be at the level that is mentioned, so that we can achieve what is needed. The only answer to all the challenge in the energy sector is diversification. I think there is not one solution. We need oil, we need coal, we need energy savings, we need renewable, and increasingly we will need nuclear. and at the range of price which has been mentioned, but I can give my experience, nuclear is competitive. New nuclear is competitive with the price of oil which has been mentioned. So there is an opportunity to develop nuclear. And I will not make a long statement on nuclear, but the challenge for nuclear is public acceptance. How can we, in the coming years, develop public acceptance to nuclear, which means that there is large industrials able to develop nuclear and government dedicated to make nuclear accepted by their population.
Okay, very quickly, Mukesh Ambani, does this ring true for India, this price range of $60 to $80, or is it too much of a burden on an economy that's trying to rev up for the long term? We saw the great growth over the last 5 or 6 years. Does this ring true for you?
I think we can live with a price range of 60 to 80, and go down all the way to 40 for some time. That's good. The lower the price, I think it'll spurn more efficiency in the world. Also, I think that we need a range of whatever, whether it's 60 to 80, 50 to 70. The more important thing is how do we create the global architecture, right? How do we bring in more transparency in particularly the forward markets? It was really after Enron that the energy markets in the year 2000 were completely deregulated. Everybody had funny ideas of energy exchanges and things like that. That needs to be reversed. We need to understand, as all of us, all 6 billion people have stake in the energy industry, we use it on a day-to-day basis. So I think that even as consumers, we need to understand who's buying, who's selling, how do we bring in more transparency, how do we get accurate data, and how do we get sensible oversight. We're not talking about regulation, but one needs oversight. And if that happens, right, I am a firm believer that oil is not going away in a hurry, and oil is connected, as the Secretary General said, to all energy demands. What we just need is a fair pricing mechanism that really drives efficiency and allows governments and consumers to choose. And I think that with all the financial meltdown that we've got a great opportunity to really drive true and fair price discovery on a global market. I agree completely that energy is an integrated market. No country can isolate itself out and saying that we will survive on our own. What we really require is a fair way of doing this. And then my judgment is that the answer will be whether it's 60 to 80, 50 to 70, but it will be in that range. And consumers can choose, industry can innovate and come up with new technologies, come up with new options, bring in efficiencies, and government still can get revenue from energy. And I think that's the path, that's the opportunity that we have collectively to bring in place in view. That's the opportunity in this crisis.
Good. I did promise to go to the floors. We have about 10 minutes of time and a number of questions. I just ask for clarity and brevity if we can because of the timeline. And we'll go to the gentleman here and then here. Yeah? If you can just identify yourself. And if we can get the next microphone, I'm sure we have more than one. Excuse me. Microphone there, and then to the gentleman in the second row. Thanks.
N.K. Singh, Member of Parliament from India. My question is addressed to the Secretary General of the OPEC. One of the key questions which Mr. Weisser had raised was how to keep incentives adequate for investments in alternative forms of energy, and how to have enough adequate funds allocated for research and development in alternative forms of energy. Now that clearly needs some degree of balance in the inter-se fuel prices on alternative forms. Given the kind of volatility which we have seen and what was referred to by Mr. Ambani, how do you think, Secretary General, that the architecture of international cooperation on energy can be substantially altered? The world has talked about reforming the architecture of financial cooperation. How do we substantially alter the architecture of energy cooperation in the international framework, which goes beyond the present concerns of OPEC?
It's a question I posed to you before, but it is concretely, and I think it's a very fair point, how do we move beyond this idea that once in a while we'll have the producers and consumers sit down together, it's, if I can put it that way, a talk shop and nothing else? How do we concretely plan energy demand and into the alternative space going forward in terms of real cooperation, going back to President Putin's comments last night?
Yeah, in OPEC, we have a workshop, a yearly workshop with the EU. We talk about, the market situation, supply, demand. We talk about, the environment, the research, the CCS. We talk to China, we talk to Russia. And now we're going to talk to Japan and South Korea. We have a lot of communication. Unfortunately, we are, even though I have been visited by some member of United States Congress, but I was unable to talk to the EIA. I think dialogue is very important. As far as OPEC is concerned, as I said this morning, we have no quarrel with any other source of energy. But we don't want you people to have a false hope for something that maybe will not work. We don't want to be a backup, okay? You people invest, have excess capacity, and at the same time we are working on the other source of energy. In case our source of energy didn't work, then we need your excess capacity. We cannot do that. We cannot be a backup. The best important thing is let us put everything on the table. We have no objection with the source of energy. We have oil. Will last for the foreseeable future. We have the reserve. The only problem is the environment and the CCS, a new discovery. Let us sit together and how we can handle the situation. We are not hiding anything. We have oil, we want to sell it, we want to get some income, we want to generate, we want to have some kind of welfare for our people. So it's not really a very difficult situation that we sit together and agree. Of course, we will not agree in the first session, but at the end of the day, I'm sure we will have a common understanding.
Another question here, and then we'll go to the gentleman there.
John Chipman, Chief Executive of the International Institute for Strategic Studies in London. My question is to President Aliyev and to Chief Executive Tony Hayward. Yesterday, Prime Minister Putin talked about the desirability of having diverse pipeline routes from east to west, though one noted that all the pipelines to which he referred, I think, originated in Russia and passed through countries with which he has harmonious and friendly relations, and I don't remember him eulogizing particularly Nabucco. Yesterday, also Angela Merkel, in a separate context, referred to the desirability of energy security being an important element in a revived and new EU-Russia arrangement. My question to the two of you would be, what are the items that you would discreetly and quietly lobby for in such an energy security constitution between EU and Russia, and what are the issues that you would fear being legislated for, so to speak, in such an EU-Russia energy security package? President Aliyev and Chief Executive Hayward.
Well, as far as Azerbaijan is concerned, we actually finalized all the major projects which we planned on time and with high degree of efficiency. And today we do not have any problem with diversification. On the contrary, we have 7 pipelines for oil and gas which can transport our hydrocarbons to various directions. We do not depend on only one route, and we do not depend on only one market. And the countries which are surrounding us are actually in need of our resources. This may seem a little bit strange, but even the countries which produce much more oil and gas than Azerbaijan made an offer to us to purchase our gas and oil. Therefore, for the coming years, we will not suffer from any kind of difficulties related to diversification. What we are concentrating now on is how to find the new markets, how to extend the existing pipelines in order to be able to produce as much as we want. In order to do it, we need to have new markets, and new markets are ready. New markets are in the West, in Central Europe. New markets can be Nabucco, new markets can be Turkey, Greece, Italy, Trans-Adriatic Pipeline, and the others. So demand for our resources now is much higher than existing transportation infrastructure can supply. Therefore, for the coming years, we will just be an observers to very sometimes unpleasant developments in our neighborhood. Of course, we would like to see more cooperation in the region, because in this or that way, these tensions play its negative role, and actually they create additional tensions in the energy sector, the global energy sector. We don't want to see that. We want to have a predictable, sustainable supply routes and mutual understanding between all the players.
I think the key to much of what we talked about today is diverse, secure sources of energy supply, be that oil, nuclear, gas, biofuels, or in the case of Europe and gas, diverse sources of gas for Europe, Russia, Algeria, Azerbaijan, the Caspian. So what is it that you need to create that? I would say a couple of things. Firstly, free, open, transparent, and well-regulated energy markets. And secondly, stable fiscal and regulatory regimes. And Azerbaijan has been a role model for that. It's allowed BP and its partners to invest $25 billion over the last 10 years and created the energy infrastructure that the President has referred to. And we've enjoyed a fantastic partnership with the country of Azerbaijan, because they have followed a policy of free, open, transparent and regulated energy markets and stable and fiscal regulatory regimes, which has allowed us to build an infrastructure from Azerbaijan to many places, which is tremendous for the consumers because they've got many ways of getting the gas and oil through 3 or 4 different pipelines, and it's been tremendous for Azerbaijan because it's allowed them to have energy independence and therefore fiscal independence and political independence, I would assert. So, I do think this is about how governments of the world can encourage free, open, transparent and well-regulated, which gets back to this point we've been talking about speculation, but transparent and well-regulated markets, and then stable and fiscal regulatory regimes, which will encourage diverse energy supply. I think the final thing I would say is that, which we haven't talked about today, but we do need the world to put a price on carbon. With an oil price of, 50 to 70, 60 to 80, and a real price on carbon that's transparent, which will allow people to invest in for the long term, vast numbers of alternative energy sources, from nuclear to biofuels and everything in between, will be competitive. And we will solve the world's energy problem. It was only 18 months ago that we were sitting here saying, actually, unless we do something, economic growth is going to stop because we don't have the energy to drive it. For the time being, everyone's focused on how do we get economic growth restarted. But as soon as it does start, unless we are on this plot, the next conversation will be it's going to stop again because we don't have the energy to power it. And it's not about choosing one or the other. It's actually about doing everything.
Good, thanks. Just a very quick question and a very quick answer, and then we'll have to wrap. Please.
Yes, my name is David Li from Tsinghua University Center for China in the World Economy. I appreciate very much your insights, especially your consensus. The energy price, oil price should be around 60 to 80 in the long run. My question is for Mr. Ambani and Badri and my good friend Tony Hayward.
I'm sorry, just for time, I need to direct it to one
quickly,
person.
Yes.
One person.
Yeah. Given that the emergence of China and India being the new consumers, how likely are we going to see a new game which is more efficient than it is? That is, for China and India come together, negotiate a long-term contract with major producers in the range of the price you mentioned. Thank you.
Good. Mukesh, why don't you handle it yourself and then we'll wrap. Yeah, thanks.
Well, I think there's no doubt that the growth is in energy is going to be driven by India and China, and there is a space for cooperation, but I really think that the right solution is transparent price discovery, which is fair to all, rather than the consumers forming a cartel and the suppliers forming a cartel and trying to negotiate. I think that today we've got enough mechanisms to really create a fair price discovery, and we just need to start from 2000, where we deregulated, to get some sensible regulation and oversight to get a fair price discovery.
Good, thanks very much. I want to thank President Aliyev, the Secretary General, and our a panel of CEOs for addressing everything. And I do have to admit that old habits die hard. I think I referred to Mr. Putin as President Putin, but we're not too sure. Prime Minister, President, but he is Prime Minister, so I appreciate the clarity. And I'll be happy to say Mr. Prime Minister when I see him in the hallway. Thanks very much for the questions from the floor, and gentlemen, thanks very much for the panel.